everything has come down. The ask price on pre-65 silver is as low as I've ever seen it in reality. And so, during the pandemic, the premium on pre-65 silver was off the charts. It was higher than everything but Silver Eagles. Part of me believes that there will be an awakening by the public. I mean, the fact that we haven't seen it yet is astounding to me. Mm-hmm. The fact that we've gone to such a culture of greed where 30-40% rise in gold is not sexy enough, where at 9.9% per year for 25 years is not sexy enough. The fact that the central banks have been buying it hand over fist is not sexy enough. The fact that we are now a net importer is not sexy enough. And it's not Bitcoin, it's not Nvidia, it's not Apple, it's not risk on. But quietly, the tortoise seems to be pulling out ahead in the race. And yeah, there'll be an awakening at some point, and you'll see premiums on things like junk silver go straight to the moon again, simply because it can't be reproduced. But when you start to see things like we're seeing, where exchanges are being bled dry of their 1,000-ounce bars, and mm-hmm. central banks are being told 8-week delivery delay, and 145% of the London float delivered in the last 3 months. These things are getting real, and I've never seen anything even remotely close to this. And it's hard trying to take this information and discern what is really happening. I don't profess to really know, but simply to take all of the pieces and put them together and say, yeah, this could actually be what they are doing. And I've been talking about this now for a few weeks, and it keeps happening. More and more things are happening that would say, geez, that's supporting that argument quite nicely. So I think that silver, certainly, look, we're right at 35, almost there. We're just a little bit below 35 on the futures. You get above 35, there's virtually nothing there to stop it between it and 45, and then the sky's the limit. Now, is that going to happen? Well, every time, when Rick Rule comes on, and I've said it a million times too, gold really leads the way, silver languishes, but then on a percentage basis, slingshots. Well, silver has been acting quite nicely the last few days. Could it bust through this resistance level? You see how much silver is being exported out of London and imported into India and the United States and China and now Russia. We talked about China buying all the doré and the concentrate. They're the second largest producer in the world. Why? There's an understanding by the knowledgeable central bank investor, the most knowledgeable investors in the world, just what silver and gold represent. And that understanding has been whitewashed from the United States investment vernacular. And that's why so few people will benefit from this. And why the people listening to you and I, some of them must say, shit, I hear this all the time. It's getting tiring already. But I mean, it's been evident to me that this is a trend since 2020, when I said all of a sudden the exchanges are being delivered on. No one ever did that before. And it's been a gradual process. And this new administration, I think, came to Trump and said, here's what's happening, and you better do something about it, because the world is standing up against the paper derivative market to their advantage. And we're going to be left in the cold with an inability to source these commodities if we wait much longer. And that's why I think they've done it under the guise of tariffs, done it with virtually no fanfare. Cynthia Loomis did the same thing. In her bill, she advocated for revaluing gold. And then in another bill, she said we should sell the gold. So it's almost like, or another interview, she said we should sell the gold. It's like they're backtracking. Maybe they were premature in making these declarations, but I don't know. Something in my gut tells me that this is moving in a direction that is going to reintroduce gold in particular into some form of a new monetary system, or at least backing U.S. treasuries. And as far as silver, look, there's a 90% correlation throughout all of history between the two, and it's a strategic metal. And I think that's been realized as well. And when Scott Bessent, say what you want about him, but when he was running a hedge fund, his largest holding was gold. He understands it. U.S. treasuries are tier one. And gold is tier one. So, maybe it's easier to do it that way. If all of a sudden gold becomes very difficult to obtain in those large quantities, maybe it's easier to buy U.S. treasuries, which are probably more fungible, easier traded. She also did say that her desire was to see stable coins issued off of the treasury bonds as well, which again would facilitate the treasury market, just like they're doing right now through Tether and USDC and the stable coin issued through XRP or Ripple Labs. So they're all backed by U.S. treasuries. I would rather own the real thing than a treasury tied to it, but I'm sure that's not always an option for some of these entities. GLD and SLV are held by JP Morgan. And, you know, JP Morgan, who paid a $920 million fine for manipulating the market and still allowed to run SLV at the time, the largest silver trust, their desk made $1 billion that year and they paid a $920 million fine. So they make 80 million, get slapped on the wrist, and still control these ETFs, now controlling GLD. To me, it's much easier to take the metal held in GLD and SLV, the delineation being that, well, you can't take possession of GLD and SLV. You can take possession out of the depositories. If you wanted to really take a stretch, I guess you could say the IRAs would be easier to take than just physical metal held at Brinks. But even still, you're allowed to distribute that metal. It would send the wrong signal. It just seems it would be so much easier and cleaner and not breaking any laws or violating civil liberties to take GLD and SLV. You can't take it anyway. So desperate governments do desperate things. I get it. You can't prepare for every eventuality, but I would be much more concerned owning an asset that tracks the price that you can't ever take possession of versus owning the real thing in a depository, which in essence is a contract between you and the entity. So could they do it? Sure. It's lower on my concern list by a long shot, though. And if we see premiums even approach half of what they were during the pandemic, and I can't see why we wouldn't. I mean, this to me tells me we're on the heels of something very big in gold and silver. Really do. And if stuff is disappearing at the highest level, how fast before that trickles down into this level? I mean, after all, the coins come from the big bars. The big bars come off of the COMEX. Typically, you know, the U.S. Mint will take delivery of contracts and send them to Sunshine Mint for refining into planchets, and then they send them to the U.S. Mint for stamping. So could that translate into much higher premiums on everything across the board? Yeah. And if things get to where they were, or anywhere even close to it during the pandemic, awareness-wise, yeah, I think it is the time to do it, because nothing corrected downward from its previous peak the way that junk silver did. $11, $12, $13, $14 over the price of silver nationwide for 2-3 years. And now it's under $2 over spot. I mean, it is a steal. I would argue that if people had a lot of silver bars, those are really the only things that trigger dealer reporting anymore on sellback. So if you do more than 1,000 ounces at a time, so over time, you could do that. You could trade 5, 6, 7, 8, 900 ounces at a time. Doesn't mean you're not supposed to do the reporting. It just means that we are not required to do dealer reporting. Junk silver used to be on that list of reporting in excess of 1,000 face when you sell it, $1,000 face value. But they got rid of that because it cannot be used to settle a COMEX contract. It's just bars. So to me, if you own bars and you want to get something far more flexible, do it over time. If you do it all at once over 1,000 ounces, you will need to provide a social. But you could do several transactions over a period of time. You don't want to call us up and say, I got 50 bars and I'm not going to file. You could just say, hey, I got 7 bars. I'd like to switch to junk. Or maybe if you do 8 bars, which is 800 ounces, you can get a full bag, 1,000 face. Be real close to that, I would bet. Real close to it. And you do that a few times, you pare down your bars, you move into junk silver, which has better upside potential, which is way more flexible, and there's no dealer reporting. Some people don't like that dealer reporting. Doesn't mean you're not supposed to let uncle know when you sell anything and make a profit. But just to cite the law says anytime you trade more than 1,000 in bars, we need your social. So to me, bars are even better than rounds because the rounds have that utility. The bars, that's the one knock against them, is they lack the utility, especially as silver goes higher. I will tell you there was a period of time, which I can't even believe, we did the numismatic swap recently.